Hey traders, in today's video I'm going to show you how I take different tools of technical analysis and put them together in order to find a high probability trading opportunity for the week ahead. Right. Hey guys, welcome back. My name is Madlam CB here, your currency trader and currency coach here at FX Link. Thank you for joining us on this week's Forex market preview video. Now on this week's video, I'm going to take a look at Euro Aussie. Now, as I look at Euro Aussie on the daily time frame, the market has given me a 26.18 trade. A 26.18 trade is a second chance trading opportunity if you have missed out on a double top. Simply, the market would give you a double top. Okay, as we start from here, the market has been going up. Okay, as we had a sequence of higher highs and higher lows. All right, higher low. Then the market topped out and we had a double top right here. Okay, and as soon as the market has given us this double top, if you missed this double top, then what you would have to wait for is a 26.18 trade, which is another 618 trade after that break below, close below of that value of that double top. So we have a double top, then we have a support level of that double top. Okay, let me bring in a line too. Okay, we have a support point of that double top. Okay, and then what the market did after that, it broke below our support point and then formed a support after that. Okay, so after we have formed a support, on the retracement we look for a 618 retracement. So from our recent impulse leg, we take our Fibonacci 2 to our support level, and on that 618 retracement we take our potential shorting opportunity. All right, so as the market has given us a 618 retracement, okay, a 26.18 trend retracement, mind you, I don't trade on the daily time frame, but this was a interesting opportunity that I saw for you guys to look at. All right, so soon as let me clean all these stuff. I like my charts clean. As soon as the market has given us a break below, close below of these levels right here, and another break below, close below of this level right here, okay, the market began to do what? The market began to retrace back and then form a consolidation right here. We have been looking for a break below, close below this consolidation in order for us to see a confirmation of an extension back down to retest at least these support levels right here. Okay, and finally we have on our break below, close below by this trend bar right here. Okay, so if I would label this trend bar right here, the market did something like this. Okay, as I zoom in closer, as the market consolidated below and formed a flag pattern or a wedge pattern, the market began to close below these levels right here. Okay, so for days and days and days, the market began to respect these support levels, support, and finally we had our break below, close below, and the market gave us a doji candle right here. So I'm expecting a continuation to the downside, at least back down to these levels right here. Okay, I'm expecting at least to these levels right here. All right, this might seem small, but as we go down to the lower time frame, you would see that this is a pretty large zone to take a lot of pips right here. Our zone starts from 157.16 to 155.82, which is a zone for at least 150 pips worth of trading opportunity right here. So my trading bias, as I go down to my lower time frame, I am going to be looking for a shorting opportunity. All right, now that we are on the lower time frame, what we see here is, what's pretty evident is this previous support level, which was violated as of late right now, as the market has broken down. So we have a structure shelf right here, all right, which should become, actually, let me correct myself, which might become our future resistance as price eventually does try to get back up to this level right here. So if I would largen this zone up, you would see price did eventually try to hit this level right there, but we haven't gotten our overbought sign. And what's quite interesting for me is this bar right here, all right, this bar right here. Do you see this big bearish bar right here? Right, let me emphasize on it. This big huge bearish bar right here, right? This is where the market started to react, right? So in the past, as we go back to the past, the market, what the market has been doing is it has been going down, up, going sideways. Soon as the bears tried to push the market down, bam, the buyers get in. All right, soon as the buyers get in, they couldn't reach or breach these levels right there. And then the sellers come in, and we have a repetition of that pattern right there. But eventually, price eventually breaks with a high momentum bar or a trend bar right here. So this is when the market started to give us high momentum. So I will not be surprised when price does react by going down as it hits this level right here. All right, so as I'll be taking a look closer at this level right here, another thing to take notice is that soon as price came back down to this level, we formed a little bit of a flag pattern, a consolidation pattern. As you go down to the lower time frame, let's go down to the hourly time frame to make it much more clearer. All right, as you see on the hourly time frame, it's much more clear that we have formed a flag pattern. As I redraw this pattern right here, a wedge pattern or a consolidation pattern, you might call it, but essentially they all give the same message, which is a breakout is coming near ahead. So now that I noticed my interesting point, which is at 157.23s, I'm gonna have to take a look at Fibonacci confluence. So I'm gonna take my Fibonacci retracement, take it from our previous impulse leg right there, and drag it back across to our low right here. And if I could bring in all my Fibonacci retracements, out 32, 50%, 786, 886, see where we have good Fibonacci retracement levels. I have my 786 right at our consolidation pattern right there, and our 618 right there. So we have a pretty huge zone right here, which starts at 157.47s and 157.12s, which is 35 pip worth of a zone right here. So if I bring in my equal leg 2 from this swing low right there and back to the swing high, if I would clone it, all right, copy it, then paste it right here, we have a termination right over at 157.27s. So if I will bring my Fibonacci retrace extension, all right, from our swing high back there and drag it back, you could see our Fibonacci extension doesn't confluence with our ABCD pattern. All right, let's see if we try to invert this Fibonacci extension and to see whether it confluences with our ABCD pattern. So I'm gonna invert it from our previous swing, all right, back to our previous resistance level, and if I would drag it back, you would see our 127 extension confluences with our ABCD pattern, which is terminating at 157.25. all right, so what do we have? First thing that we have, okay, let me try to bring this in. So if you have some system that you would take a look at, some things that you would consistently take a look at with us, first thing you might say, we have minor structure. Okay, we have minor structure right here. Another thing, we have our fib inversion. All right, we have our ABCD pattern, and then we have our Fibonacci retracement. We have our Fibonacci retracement, right? We are left with basically technically waiting for price to eventually extend back up to this point, right? Then my trading style, I like to look at double tops and double bottoms, which give me a much more conservative approach into the market. Then I'll be taking a short opportunity like that would look something like this. I'll be taking 39 to 40 pips worth of stops right there. Then first targets, I would have to take them right here. So I would take 112 worth of reward right there. Then second targets, for my second targets, I would take a total of 144 pip worth of reward right here.